Good morning to our panelists. Thank you for joining me today on screen. Craig and I are very appreciative to be joined by some of the industry's experts this morning. So thank you to Sarah and to Richard for joining us today. Our focus in this morning's webinar is how to navigate this turbulent market that we're currently in and how to support all of our customers through the cost of living crisis. We know that inflation is at a 40-year high with a peak next month expected, and mortgage interest rates have been more than doubled in the last year. It won't be news to anyone on the panel, or in fact anyone listening this morning, that the market is very turbulent, and we heard earlier from 27 Tech about the large number of product changes that have taken place in recent months due to the steep rises in swap rates that just seem to keep climbing. And this, of course, has impacted lenders' product pricing, triggering changes across the market. So Sarah, let me come to you first. What impact has this all had in the broker marketplace?
I think from a broker's point of view, it's a very difficult job role at the moment. I think that's an understatement. I know lots of people are saying the same thing, and I don't think it's people whinging or whining. It really is pressured. And when those rates get pulled with such little notice, your clients don't realise the backstory of why that's happening, and actually some brokers don't even understand why that's happening. But from their point of view, they have hours notice, their whole day and diary is thrown up in the air, particularly when you're trying to promote things like flexible working. That's almost impossible when those moments happen. And you've got to hold the hand of your client, navigate your own stress levels at the last minuteness. And it's not just one lender, so it impacts your entire day, entire week. I think also brokers' roles are not just being brokers right now. They're having to navigate so much fear from their clients and headline news changing all the time. We don't know it's coming as much as anyone else, so it's news to us at the same time. But we're expected to obviously hold their hands, be the calm voice of reason. And I think all of that means our job role as brokers is just entirely different and much more complex than it's ever been before.
Thank you, Sarah. Absolutely couldn't agree more. Now, Richard, you were, of course, part of the senior leadership team at Simplybiz, but you also have your own brokerage firm too. Can you give us a bit of an insight on both sides and how that's impacted you?
Yeah, sure. So I think first and foremost, wholeheartedly agree with what Sarah said. It's a tough time. Well, it's a tough time for everybody. Yeah, whatever industry you're in at the moment, and I think for brokers specifically, it has been a very frustrating period. I think the key thing that I would sort of say to every broker is just remember that you do an excellent job. You are doing an excellent job, and although it is frustrating at the moment, and it's always hard when you see the product that you're selling or advising on all of a sudden become increasingly more expensive. But that's happening everywhere because of the inflationary world that we live in. Just remember that you are actually now even more valuable in the process. More customers need you because of that increasing complexity. I think wearing sort of the hat of my experience, both within distribution and advising, it's very easy to say this is what you should be doing at the moment. But I think the most important thing, and this is for both brokers and lenders, is good communication. Through tough times, the more you can communicate. We saw it through COVID. People worried about what was going on in the world, and the businesses that did well were those that kept communication up with their staff, kept staff engaged despite the fact that they were working remotely. And the same goes for your customers at the moment. If you've got a client that you're servicing an application, so it's really easy to say this, jumping on the points that Sarah's just made, this is how much a broker needs to get involved. But the more that they can have those touch points with a consumer, just to keep them up to date with what's going on. It might be that there's no news because the application's been submitted and it's sat in a queue with a lender, but if you can over communicate during the tough times and be as open as possible, I think it's more likely to break down any of the barriers that sort of come up with what is perceived to be bad service. And I think what's really tough at the moment is for a broker to be able to deliver good service because there's so many factors that are outside of their control. But they can demonstrate that good service through over communicating.
Wonderful, Thank you, Richard. Great points. Craig, from the lender's perspective.
Well, I think, yeah, it's just chaos all round, really. And unfortunately, in the short term, I think the chaos is getting worse. So, I mean, most mortgage lenders use swap rates either to price off or use as a proxy for pricing. And to give you an idea, last September, October, swap rates were 0.8%. And they kind of drifted up as, you know, we had the problems with Ukraine and inflation going up, kind of drifted up slowly to about 3% at the start of August. At the end of August, they were 4%. So they'd kind of gone up 2% in kind of 10 months and then 1% in 1 month. And that's pretty terrifying. And then they went up 1% in the first 2 weeks of September. So they got to about 4%. So that's pretty scary because then it's, you know, it's gone from 10 months to, you know, a couple of weeks. And then unfortunately, they've gone up 1% in the last 2 days. So unfortunately, the government's budget hasn't gone down. I mean, forget about the politics, the financials haven't gone down well with the markets. So that is therefore everyone's thinking that interest rates are going to continue to rise. The market's now pricing in interest rates of nearly 6% in the next 2 years, which is far more than anyone expected. So there's these huge changes in lenders' funding costs. And of course, if you don't pass those on quickly, you end up writing a whole load of business that's losing money, which obviously none of us are paid to lose money. But what that then means for brokers is just this chaos of constant product pools, things getting withdrawn, crazy notice. You know, and that's something we struggle with as well because we've got the same funding cost issues. We do try and give brokers 2 days notice when we're pulling products. Sometimes that can only be a day and a half, but we normally try and give 2 days notice and we stick to that. But it's really difficult because I totally understand the issues for brokers. And then of course, customers. I mean, customers, this is a new world for customers, for people who've been in the market for a while. You know, they're used to every time they go and remortgage, when they speak to the broker, it's a great conversation because they save money. Maybe their LTVs dropped, rates have been drifting down for sort of 10 years. It's been amazing. And now, of course, they're coming to remortgage and they're looking at much higher costs. I mean, I've just done a broker PT for a buy-to-let that I've got, and it went from 1.5% to 4%. So, you know, the monthly cost of the mortgage have nearly tripled. And that will be the same for all buy-to-let landlords. So what does that mean for tenants? So it is difficult, and like I say, unfortunately, it's getting worse at the moment. So I do think we're going to have a few weeks and maybe a couple of months of more chaos and more short-term price increases. I think you're going to see mortgage rates over 10% fairly soon. I think some lenders are already stressing at 12%. So this is just a world we haven't been in for a long time, but it does create a lot of issues for customers. But I do feel very sorry for brokers trying to manage both sides of this and hold the customer's hand through this.
Brilliant, thank you, Craig. Turbulent market, very much of an understatement by the sounds. Well, we all know that the mortgage market has had a very busy period, fueled by the stamp duty holiday, and of course, in more recent news, we've heard that could be triggered again. Market volumes are still above pre-pandemic levels, but there are reports that the current market is cooling, or what I would describe as normalising. What can brokers do to continue generating new business in this challenging time? Richard, let me come to you first with that one.
Well, I think the first thing, and this builds on from what Craig said, there's a hell of a lot of volatility, and we know that there's more storms to come. I think the main thing that the last couple of years have taught us is to expect the unexpected. You know, literally anything could happen. But I think, you know, for brokers, first and foremost, my advice would be don't panic. You know, the market is extremely robust. You know, if you think back to those first months first weeks going into COVID, we were being told that house prices would drop 15%. And you fast forward to today, and all of the backing, the extra money that's been pumped into the system, and broadly house prices are 20% up. I think, you know, the fact remains that we are undersupplied from a housing stock point of view, and therefore that whilst this may mean that a number of people, these rising costs, these uncertainty, this fear that a lot of consumers will have, mean that some people decide not to move. You know, there's a lot of people who will still do so, and I think from a broker point of view, it's about sort of controlling the controllables. You know, try and forget the factors that are completely outside of your control, and just make sure that you are, and I'm going to start trotting out cliches now, but you know, I'm focusing on the basics, keeping the basics right, having more conversations with people. You know, I used to work with a really experienced advisor, and he said, you know, you should never have more than 7 cases on the go. It's like having 7 fishing rods. And what I used to say to him at the time, this is a few years ago, is actually, find a way to get more fishing rods in the water. And I think that's what brokers really need to be doing now, because there will be more people who change their mind. if they can have more conversations, have more potential cases on the go, they will still find those transactions. They will still find the people who are looking to buy. And the way to do that is to actually, market yourself differently, maybe try engaging with different ways of attracting customers. Social media is the obvious space that traditional intermediaries don't interact with a great deal, and that's outside of LinkedIn. Try others, fish outside of your own pond, but also use technology. Use technology, a good CRM system, good research tools, so that you can actually focus more time on having conversations, because you've got everything else organized and taken more care of. But yeah, I think those are probably the key things.
Brilliant, thank you. Some great tips and anecdotes there as well. Thank you, Richard. Sarah, what would be your kind of view on how to support the market in this very challenging time? What would be some top tips from you?
I think you've got to provide value to your clients and your audience, whatever that looks like. So you mentioned social media. I mean, social media is generally a long game, but people are using it more and more, especially around these topics, because they want to know more. They're interested. It's much more current information to more people. So I think being a bit of a broadcaster is really important. Translating the news. The headlines are always fear-based, but if people are educated, they understand what it means to a first-time buyer, to a home mover, to a person that's looking for a remortgage, and we can make the scenarios based around them. That is of huge value to customers. They just want to know what's going on and what it means, and they don't understand. And I think as brokers, we're immersed in it. We understand what we're doing. We understand what a swap rates does and how that impacts. The average person doesn't. Even the best business owners out there who are, very high net worth, they don't necessarily understand the mortgage market. They know their lane, and it's up to us, I think, to translate that to a wide variety of people and find ways as a broker to offer value. If you just ask yourself, how can I offer value to the wider community? You can do mortgage clinics, mortgage MOTs, work with your agents and get yourself in there. These are all things that are of huge value. And I think previously people just didn't care, like, what's a fixed rate? I don't care until my own mortgage comes up. But right now, with the budget and the rates and this broadcast news, people actually want to learn for the first time. So in a broker's position, as hard as it is, we are in a privileged position. People need us, and we are a service that's really vital to households right now. And actually, if we can twist that on its head and just think, how can I give back in the best possible way, the business will find its way back to you.
Oh, fabulous, thank you, Sarah. And Craig, what come to you next?
I think to take Richard's analogy about fishing rods, I think you're probably going to have to go and fish in different pools that you haven't fished in. So if you look at the areas we expect to grow, because clearly the market is looking like it's going to soften down, things like affordability, people won't be able to get the loan that they could have got last year, etc. I think the areas that would expect to grow is normally in a recession, you do see self-employed grow. Certainly in the last recession, that's what we saw, people potentially move industries, or they might even lose their job, but they then start their own business. So I'd look at self-employed. There's going to be more things, a little bit with potential credit issues, etc. Potentially we might see the high street tightening their scorecards, lending criteria. So all that leads you to try and keep up to date with what's going on in specialist lending, because that's where a lot of that business will go. We talked about social media, just an analogy of mine on TikTok. I don't really know much about TikTok. My kids seem to use it all day. But we did have a broker last year when we launched our long-term fixed product, who did a TikTok about it. And for some reason, it went viral. And she got 600 inquiries from one TikTok video. And I wouldn't expect that from every TikTok video you do. But I think that just shows how embracing different things and looking at new areas will hopefully yield some good benefits.
Fantastic, thank you, Craig, and really good bits of information there, which I hope the audience have found useful. I mean, without a doubt, there has been a lot of change in the industry. We've entered this rising rate environment this year, and we're having conversations with customers, a generation of homeowners who have never experienced this type of environment or market before. The pressures of securing a good mortgage rate are building, and we are hearing about new schemes such as Don't Pay UK being advertised to customers to support them through the cost of living crisis. very kind of controversial topic, I suppose, but what conversations would you be having with your customers to better educate them and help them in this current market? Sarah, I'll come to you first with this one.
Well, that Don't Pay UK just went viral. So we used the same method they used to get their message, used their hashtags, used everything they were using to try and widespread the message, which it did, to try and actually put some reality behind that and explain to people that's all well and good. I understand the purpose behind it and we're totally supportive of that, but understand what this means for the short term and long term in terms of your credit. Like, be the voice of reason, the boring information that's absolutely necessary, because it's too easy to get angry at these, you know, energy companies, get on board, you know, get hyped up by everybody. I get it, you know, you hear the news headlines, it's so incredibly unfair for some households, but that isn't the answer. So we've tried to utilise their methods as just an education source behind it, and actually those videos in the team have gone, you know, not to the extent of that TikTok video, which some of them go to millions, but they have been the most viewed. So it is definitely a topic that everybody is talking about. I know Martin Lewis talks about it a lot. But there needs to be as many of us spreading those messages as possible. Like, that's where the brokers can come together and unite in the messaging, because it's going to be a nightmare for them and us if people continue to sign up to those schemes and don't realise the impact later on.
Yeah, absolutely. Fantastic points there, Sarah. Richard.
No, couldn't agree more with what Sarah said there. I think the broker has to be the voice of reason, and that comes back to, you know, one of the tips that Sarah gave about broadcasting. You know, do put yourself out there and give context to what's happening. I think for me, so the other ways are actually helping with some of the things, and you know, I know Boris was routinely derided for his kettle analogy, but there are a lot of things that brokers can do with focus on sustainability, and you know, being able to access additional finance to help people make changes to their home to save energy, and not all of it comes at a huge cost. You know, there's lots and lots of momentum around people improving their EPC rating, and that doesn't mean that you have to advise every customer cost of living crisis point to go out and spend 10 grand on a heat pump. It can actually be focusing on some of the small changes that people can make. So I would encourage people, if they're not already engaged, to get a greater understanding of the small improvements that you can make as individuals, as households, to actually save energy. You know, just going out and changing your entire home to energy efficient light bulbs makes a huge difference. You know, going back to, it sounds terrible saying it, but actually sort of going back to some of the things that my dad would have used to say to me when I was growing up, you know, don't turn the heating on, go and put a jumper on. But it's the little things like that do mount up, and I think you know, it's about finding a balance of a number of different things. So providing a sensible voice of reason, as Sarah said, but actually, you know, touching on some things that other people can connect to as well. And I think, you know, coming back to the broadcasting and talking about topics of interest, I think if financial advisors, mortgage advisors were talking about green and sustainability, but not just in terms of getting a product that saves you on a home that you're buying that is already A to C rated, but actually focusing on the points that customers can do to improve their efficiency, that would also help and potentially save them money in the long run.
Brilliant, thank you for that, Richard, and that probably leads very nicely into Craig as well.
Yeah, well, I mean, we're all eco warriors now the bills are so high. But obviously with the Kensington, our green mortgage, that's designed to help fund those small changes up to £1,000 if the customer improves the EPC rating. But in terms of the broader question, I think, yeah, it's definitely hard with customers at the moment. There is so much pressure. I think absolutely the Don't Pay UK, just don't do anything daft that's going to affect you long term. And I think probably the other thing for customers is just with a rising rate environment, don't delay. And I chatted to a broker last week who told me that he had a customer had come in to do a remortgage and just kind of said, look, I'm sorry, your new rate's here versus your old rate. Customer understandably not very happy, went away because he said, well, I'm just not signing that, you know, this is a rip-off, I'm not paying another £200 a month. Went away, moved on to SVR and obviously got a big bill increase. Eventually kind of got their head around it, accepted it, came back to the broker and said, okay, fine. But of course, rates had moved by another 1% by then. So they weren't kind of paying more than, it was sort of, it'd gone from 200 to 400 pounds, the increase. So it's really important people try and do something today, because like I said at the start, there's no evidence that this kind of madness isn't going to calm down anytime soon.
Just quickly on that, Craig, I think 2 points is if you don't have capacity to deal with it, give a quick no, so that the customer has the opportunity to go and find an alternative option, because days can make a difference. And then the other one is, wearing my Simplybiz hat, we speak to firms, in the past they've contacted people 3 months in advance. Remortgage offers on the whole are valid for 6 months now. So if you can be contacting people 7 to 8 months in advance, so they're ready on day one of that 6-month point to go ahead with something, you've prepared them early, you've advised them appropriately, and just being proactive about it really, really helps.
Yeah.
Brilliant, thank you everyone. So our last question for today. In a turbulent market, we know the importance of broker advice, and I think absolutely at the moment it is more relevant than ever before, as Sarah, you've mentioned. With a new kind of business looking at slowing down, it's also very important to protect a business's back book. So very much on topic of what you were just covering there, Richard. What advice could you give to brokers in the current market to navigate and maximise their business in this space? Richard, I'll come back to you on that.
It probably comes back to a couple of points I've made already, but actually hardwiring them into your own customer journey, and that's not someone going from application to completion, but how they engage with you over the lifespan as a customer. So building in things like annual reviews. I think with all of the uncertainty at the moment, being able to have a conversation with someone who holds some of the answers, building on some of the points that Sarah's already made, will be of real use to people. But also it does genuinely open up other opportunities, whether that be forward looking on the remortgage conversation, or whether it be positioning them around some of the other areas. So protection, ancillary products, will writing, for example. It's not going to generate huge volumes of income, but it's another reason to have a conversation with a customer, advise them on doing the right thing, and actually help them with a level of other services. Craig touched on specialist lending, for example. Every customer that people speak to will have some other facet to their lives, whether that be family members that need help, or whether it be a business, more people going self-employed. Just checking in and having an annual review, you might uncover a business need that you can then refer on to a specialist partner if you don't do it yourself. So there's loads of opportunities, but I think the key thing is making sure that you are having those conversations with customers to extract the opportunities.
Fantastic, thank you, Richard. And Sarah, I'll come to you next on that one.
Yeah, I echo what Richard said, to be honest. It is not just about contacting them 7 months before, 8 months before. It's about the nurture journey they've had if they're an existing customer. I think there was a period of time where brokers just focused on the forward motion of their businesses and never looked back. And perhaps if they were smart, they recruited teams to look at their back book. But if a customer's dealt with you, even if you haven't got the capacity, that initial call can make all the difference, because you are their broker, you are the person they were invested in. But that nurture journey does help, I think, to enable the trust. So even if you don't have that in place, you can start today. You can send a mailing list out to all of your clients today, whether they're coming to the end of their deal or not, and say, we know the financial world is changing. If you want a free mortgage MOT, contact us today. If you want us to just give you a free review of your situation, 15 minutes in your diary, or allocate somebody in your team that can just do 15-minute appointments that people can book in, I think would make the world of difference. It's just, again, about giving value back to the people who've already invested in you, rather than always focusing on finding brand new people. You need to put as much time into them as you do your marketing for new leads, which isn't easy if you're not in the habit, but we can all start a brand new habit today if we've got the right mindset, and those will be of huge value to brokers once the market starts to settle and quieten.
Fantastic, thank you, Sarah. And Craig.
Thanks, Eloise. Don't often give me the last word. So yeah, I think affordability is definitely going to make remortgage harder. So obviously, I think PTs will grow, but it's really important that if you're recommending a PT, that the customer knows that you've the added value, that you've looked at everything else, you've considered all the different options, because I do think PTs will grow. And I think, just in a summary for me, it's a difficult market, it's a crazy market in some ways. I think that, unfortunately, that craziness will continue for a little while. But the positive, probably the only positive about that, is more than ever, customers need brokers, because they can't do this stuff themselves, because everything's changing all the time, and things like affordability is changing, rates are changing, and eligibility and criteria is changing. So, you know, it is very, very difficult for brokers, but I think you should be very proud of the value you can add to customers, and that they need you. They can't do this themselves because it's just too hard.
Yeah.
Absolutely, couldn't agree more. Well, no, thank you so much to everybody for joining us today, and thank you to all of our panelists. And that does bring us to the end of the questions, but hopefully that's provided a little bit of insight and helpful tool to the intermediaries that are watching today. But yes, once again, a huge thank you to Richard and to Sarah, and of course to Craig as well, for taking the time out to join us this morning and sharing their thoughts. We do have a couple of other areas to finish covering this morning as well, which again hopefully should add to that tool bank for you.